Good morning, everyone, and welcome to May's Founders Q&A session with Next founder Anthony Millin. Anthony is the founder and co-chair of Next, powered by Shulman Rogers, as well as a serial entrepreneur and a venture capital partner. We hold these monthly Q&A sessions so founders can come in a free environment and ask all the burning questions that they might be facing in order to launch, scale, and grow a startup. My name is Lisa Friedlander. And at this point, I will turn it over to Anthony Millin, and we field questions. Feel free to put them in the chat, chime in, unmute, turn your cameras on. Since we're a small group, we'd love to have a free flow discussion. Thanks so much.
Great. Thank you, Lisa, and looking forward to today's discussions.
Would anybody like to kick us off with a question? Don't be shy. You came for a reason.
So, Anthony, can you tell me what's going to go on June 1st, that meeting?
Yeah, the June 1st meeting, we have two panels, a panel of Series Seed investors, and then we have a panel of Series A investors. And they'll both be moderated panels, and then there will be some networking. There'll also be other founders who are there, and there will be investors who are not on the panel who will be there, and there'll be some networking afterwards. This is the first event that we've done through our new platform called Next Raise, which is geared towards helping two things. One, helping founders be more investor ready and across a range of activities, and then also helping facilitate introductions between investors and founders in a more scalable way. And we'll be adding more and more to the Next Raise platform. You can read more about it at next.law on our website. We have a section now for Next Raise, but we're very excited about this first event, and it's the first of many new activities, platforms, and technologies and services that will be added to it to continue to drive our mission, which is around empowering startup success.
So can we consider this kind of set up for warm introductions? Is that?
It's there are, this particular panel, and some of these will be, the structure here is that the investors selected from a group of companies who applied to participate, companies they were interested in having one-on-one meetings with. So there will be one-on-one meetings that happen before the panels, and then some networking afterwards.
Okay, great. Thank you.
Kent, what brings you here today? Do you want to introduce yourself?
Yes, please. Thank you for this opportunity. I have been involved in a startup. It's called Innovation Labs by Mentors and Makers. And we are combining maker spaces with business incubators so people can learn how to use digital technology to make prototypes, products, and start sustainable businesses. I've applied to and been accepted into several local business incubators. And I've been a finalist and a semifinalist for Halcyon.
Oh, we know them well.
They had an event just yesterday. It was so inspiring to see what they're doing. Something I'm currently working on is developing a makerspace for Bethesda Green, their innovation lab. I met with Dave Feldman, their new interim director. I've been involved with Bethesda Green for many years. I think the first year that Dave came on board. So Anthony, I understand you've been involved with them.
Yeah, I was on the board. I was on the board for about 4 years and then the chair for a year.
Yeah. So thank you for your service. What advice would you have for someone in my position?
No, I think it's a wonderful organization. In terms of working with Bethesda Green, Dave, I think, was their first executive director when it was formed by George and by Seth originally. And it's been great to also see their space there for startup companies to grow out of and how that's evolved. I'd love to hear, so in terms of some of the accelerators and that you're working with, are you looking to join an accelerator program? Like one of these programs?
Well, are you asking
not new chip.
Are you asking?
No, you said you've also been talking to a number of, we have some great accelerators in the ecosystem now.
Right. I've participated in 202 Creates.
Mm-hmm.
I was in the last class of in3DC, the Inclusive Innovation. Well, I've forgotten the name of it, but yeah, I've found that I've developed the concept with each one. Each incubator or accelerator has had its strong points. So,
helps a little bit in different ways, I'm sure.
right. For example, with 202 Creates, I really felt connected with people in the district government. And as a result of that, I interviewed the former director of the downtown DC bid, who I knew from when he was the director of the DPR, Department of Parks and Recreation. But something that I learned from him is that he thought a complete economic recovery could take 5 to 7 years. And that was just last summer. So that means we're right in the middle of this economic recovery. So anyway, I thought that provided some unique opportunities for starting a network of innovation labs, combining maker spaces with business incubators, where people could learn how to take the next steps in starting sustainable businesses.
Yeah, no, I love the concept, and I've seen in New York a few people who have focused on that combination around sustainability and spaces where you can actually build and make things and develop products and hardware and that you can touch and feel.
Yeah. So I'm sorry, any suggestions on working specifically with Bethesda Green?
It's been a little while since I was involved with them. I think Dave is a great person to talk to. I think Seth is another phenomenal leader in the industry in our area in terms of a serial entrepreneur with tremendous success, and so that's another great person to connect with around doing work with their program there. So those would be two people to talk to. When I was there, we were just starting to really grow out the space of the accelerator and look at additional services that could be provided to support the startup companies that were coming out of Bethesda Green.
Do you think this is the right time for Bethesda Green to consider moving to a larger space to expand their program offerings?
I think it's a good time for anyone who's focusing on sustainability to look at options that are out there.
Right.
I do. I think it's a I'm seeing a lot, when you look at segments, it's a segment that we're seeing a lot of activity in.
Right. Well, I suggested that to Dave Feldman just last week.
Yeah.
Guy, it's in good stewardship. We have thanks, Kent. Really appreciate all those questions. We have one in the chat, Anthony, from Jan about sort of the downturn that everybody is experiencing, but still feeling that investors are still focusing too much on the fluff. The top line versus the bottom line, how to stir up excitement. Any thoughts on those angles of what we're seeing in terms of who's focusing on actual profitability and who's focused maybe more on vision and big picture?
I think there's less focus on vision, and we're seeing, at least for funds that we're talking to and investors that we're talking to, are slowing down their process. They're spending a lot more time in due diligence. They're spending a lot more time looking at actual traction and actual performance. So, we're still seeing financings happening. We work on them weekly in terms of different companies that we're working with. But we definitely seeing, and you're seeing it in the broader statistics, it's not that activity stopped. I think it's a little bit more that people are spending more time. So you have a backing up of deals as investors dig in deeper on their diligence process. And so I do think companies that have customers and profits and people are looking at business models and stress testing them for actual sustainability and validity of the underlying business models, less than just looking at the total size of a market and the team and the vision as the drivers. So I think we're seeing that happening more and more.
Yeah, and hopefully that addressed your question. If not, feel free to chime in. And Elizabeth, you too, feel free to add your question to the chat if you're not in a place to unmute. Anthony, do we expect like a summer downturn, the way sometimes raising in the summertime is always difficult or can be?
I don't know if it's different to other summers. I think we've been telling clients who are not already in a fund, like in documentation or term sheets, to use the next few months to really gear up and be ready for a big push right after the summer. I think a lot of investors slow down over the summer and are away over the summer. So for deals that started in the spring that carry over, we're working on deals that will go into June and July to close. But for new conversations, I think the summer is a good time to really get everything ready from an investor readiness point of view, to be able to come in after Labor Day and have a very strong push. So
that's a good point. Yep, that makes a lot of sense. And Eddie, welcome. I'm not going to pick on you, but feel free to chime in with any questions, either put them in the chat or feel free to fire away. And Laura, welcome. Same with you. We're just having an informal discussion here since it's a small group. So feel free to enter your questions into the chat or unmute and fire away.
Thank you.
hey, Laura.
Hi, Anthony.
Laura, what brings you here today?
Well, I would never miss an opportunity to hear the profound wisdom from both of you. So that's always good.
Any burning questions of late?
Here's an issue that's a little bit of a legal plus a little bit of a business question that's popped up here. I'll start it. I don't know if anybody else has this issue that's happening. But you know what's happening interestingly is, let's say I have 10 investors that are, actively involved in, doing due diligence and, wanting to move forward. But it seems like every single one of them keeps saying to me, well, tell me when you've got 1, 2, and 3, 4 inked on the deal.
Sure. Mhm.
I see everybody else nodding. So I'd love to hear any kind of strategy. It's not, I mean, I think it's is there any kind of like, I don't know, anything that we can kick to like, because I don't think the urgency factor that we've all used historically, like, come on, you got to get in, and we're going to close this in 90 days or 30 days, right? I don't necessarily think that that's been working. I wonder if anybody has any tips around that. So I'll just open that up, and that's a little bit of a business question as much as, is there a legal trigger that we can use to try to help?
I mean, people are vacillating, right? So investors are going between the fear of losing money and the fear of missing out on the investment opportunity, which is why the first tranche of capital is always the hardest to bring in, because people know there's still time if you're not getting close to what you were looking to raise. So one thing that you can look at doing strategically is, if you're looking at a range, to start off at the bottom, look at how many people you have soft circled, and see how close that is to how close your soft circling is to the raise amount that you're looking to bring in. And you can try to see if you can bring a group of people together into a closing. So what you'd basically say is, look, I have enough people now to get to $500,000. And we're going to look to do a close at $500,000, and then we're going to execute for a few months. And, based on the rate of executing, we'll make a decision whether we bring the next tranche in at a higher cap. So that's one thing. No one wants to be first, because the first money in is riskier than the first 50,000 or 100,000 is riskier than the person who's putting in to get you to 500,000. And they're not getting any extra benefit for that risk if they don't feel the fear of not getting in at all. So one is, you can try to move slowly a group of people and have a single close, and around a date. Another thing that you can do is have a little sweetener for the people that come in first, in the form of warrants or some kicker for the first tranche of money that comes in. And so you'd be saying to people, I understand, we have a lot of people interested. But we willing for the people who are willing to move first and get it started. We think a lot of it's going to come in quickly once we close the first 250 or 500 or whatever the amount is, and we're willing to give some extra value to the people who are prepared to move quickly. So
what would that warrant? What do you think? That's a great. So this is really helpful, Anthony, as usual. Can you talk a little bit more about the warrant? Like, what would you do as a first in kind of kicker?
So, you would give them some sort of warrant coverage. So if somebody puts it, you can do it based on where you would say to people that you have a warrant that could be good for at least 5 years or 7 years or 10 years. And you can make you pick an exercise price, which could be the price of the cap, or it could be you'd want to spend time with your lawyer to figure out exactly where you price it. And you could then decide, if you say this, if it's 25% coverage and somebody invests 100,000, they have a right to invest in the future another 25,000 at the exercise price for that period of time. So you pick your warrant
Mhm.
coverage.
Okay.
You know,
Okay.
if it's 50% warrant coverage, they can invest 50,000 if they put 100 in. So it gives them the ability, without putting any more money at risk today,
Yeah.
to, if the business has got a cap of 10 million, they can wait for the valuation to be 100 million or 80 million or 50 million before they put the other money in. So it's just all, it's an all upside. It's like an option
Okay.
that gives people upside. So sometimes, right, sometimes you're working on fear, you know, you're working on people missing out. Sometimes you can move people as a group where they get security in a single close. And if you can get enough money in that close that you could potentially not, you can execute, and maybe the next group that comes in is not going to be guaranteed to get the same cap.
Super helpful. That's why I said a little bit of business, a little bit of legal, right? What, you know, what can we do to kind of do that? I think that's brilliant. I think, right, I think my hypothesis, whether right or wrong, right, is what you just said, is that we're going to be able to, the first in is going to be the hardest, right?
Always, always the
Yeah,
case.
And then during this time, how do we kind of craft it so that we can get through that? But love that as a strategy. And
Mhm.
Yeah, Laura, the only thing I'll add too is, you know, most, well, I couldn't say most, many investors and investor groups and funds and angel groups, like, for example, Citrine Angels, we're very open about whether we'll lead or not. So part of doing research on who you're talking to as investors is understanding, are they going to lead, right? So it's not like you're getting your heartbroken every time. You're like, yes, we'll do it, but we won't lead. If you know that sort of going into it, then I think it may help the process, maybe by offering the warrants per Anthony's suggestion, which is a great suggestion, of course, but knowing ahead of time what groups are known for leading and what groups aren't. And some groups prefer to lead. So finding those that actually prefer to lead can end up saving, you know, a lot of time and heartache too.
And the reason a group, you know, groups want to lead is they get the ability to be the driver of the terms, right? Because if you're the lead in a round, you're negotiating the terms. Other people are going to pretty much come in based on the terms that you've set. You will often get, if it's a big enough round and you're putting in enough money, you may get a board, you may get the board seat representing that round of investors. So that becomes kind of another component. And so that's why, you know, those are some of the reasons why people will take the lead is to control the terms and to get some of these extra rights.
I've got a quick question, Anthony. I've probably met with 100 VCs over the last several months. And as you know, I'm a pre-seed, pre-revenue tech startup. You know what I'm up to. And one really offensive question I get from multiple VCs that I show all the people on my team, and there are other businesses that would be under subcontract. And I say, I have team agreements with all these people. Say, well, I assume everyone's working full time on your effort right now. And I say, of course not. You know, I bootstrapped it as long as I could, but I can't have everybody working full time of a pre-revenue, pre-seed startup. Is that a valid question a VC should be asking?
I think a better question is how strong your commitments are, because people are investing. You know, you often hear investors say they're betting on the team or they're betting on the jockey more than the horse. That's right. So who the team in becomes very important, but you have this problem, like all founders, where you, especially if you're trying to find great people who are in full-time employment somewhere else, no one's leaving that position and taking the risk that sometimes are needed to take if they're not particularly a founder. So I think the way you would address that question is you've identified, you know who your team is. and you can kind of show them the backgrounds of the team players and how within within X month of closing of the funding, this is what the team is going to look like.
I've seen that many, many times. Yeah.
And sometimes people are willing to speak to the investors, and sometimes people, because of the sensitivity of their jobs, you just kind of giving a profile. But I don't think it's unfair to say that we're not starting from ground step one. We've already identified who the team will be. And, the other thing you can do is you bring on advisors. So you expect a company that's early to not necessarily have full-time employees, but to have de-risking through surrounding yourself with some key advisors that you can bring on for some stock options.
Right. I've already got 3 advisor agreements in place. So
Yeah, so that's what you point to. You point to,
Right.
This is the advisors we have. We're attracting some of the best minds in the industry because of the vision and the passion for what we're doing. We've identified the rest of the senior team, and they'll, within 90 days of funding, we'll have our team in place. And this is what the first year P&L is going to look like with the team on board.
Okay, great. Thank you.
Any final questions as we approach 11:30? We have a few minutes left for a quick question.
I have one follow-up question, since we were
Sure.
just talking about term sheets and leads. In my situation, you guys know that I have a 125 term sheet in that on paper they established, the terms and have said that they would be lead. My question is should I really call them the lead with a 125 investment, or do you think people are looking at higher amounts for a lead? Because we're raising 3 million. So I just had that quick question.
I think it would be very hard at 125 on because if I'm coming in and putting in $1 million, I don't care what the person who put in 125 negotiated. I'm going to renegotiate.
Yep. And they're looking at follow-on, but should I say I have a lead or not? Do you think, Anthony?
I think it would be hard to say that 125 is a lead on that. I think you have an investment, or you have somebody who's interested, and you have a term sheet, and you can see if other people are interested in that same term sheet. But it would be hard to say that's, typically I think to lead a round, you're putting in like 25 to 50% of the round, maybe 30%.
So that's interesting. Lead and first are not the same thing.
Not necessarily.
But
Yeah.
I mean, if you have somebody willing to fund, you move forward and you fund. If somebody's coming in with a bigger check and they're going to change the terms, the odds are they're changing it to be more favorable. They saw what came in before, and with the leverage of a larger check, any changes are going to be an improvement for the person who put the first money in, right? You're not going to be giving somebody who comes in afterwards better terms. You'll go back and amend the first money often to get the same benefits as somebody came in 4 months later with a bigger check, if it's all kind of tied together. If the second round comes in later, is at a different cap, then it's just a different round. But if it's the same cap,
Maybe you can also say things like we have X% committed, right? Rather than saying I have a lead, we have X committed, or we have X soft circled, or we have, language alluding that you have significant interest, or you're getting significant interest, your X% way to your funding. And then the other thing, Laura, too, and Anthony would know better for sure, but if you, I know you have 3 million, but sometimes, if you're struggling to reach the 3 million for whatever reason, it might be quicker, easier, lower your amount, close, oversubscribe, hit some milestones, and, nobody wants to continually fundraise, but it might be better to do that than banging your head against a wall to get to 3.
Good suggestion. Thank you.
So with that, we are approached at 11:30. Thank you all
Great.
so much for joining our Founders Q&A this month. We hope you all have a safe and wonderful holiday weekend.
Thank you.
Thank
Same to
So
you.
much.
Bye-bye.
Bye.
Thanks, everyone. Bye-bye.
Bye-bye.